Good evening. This is Ken Long from Tortoise Capital with a review of a couple case studies in the regression line fractal framework. The first one is in our old reliable intraday trader XIV. This was also an RLCO pattern, a morning hook. So we have the open here. I should say this is July 10th, 2014. So we have a big gap down, finds support, bounces around a little bit, has a series of 3 higher lows. Notice that the price and 10-period regression line crosses the 90. That's the green sine wave. So we'll go ahead and make an entry here on the third higher low and crossing the 90 at 44.20 with our typical 30-cent stop down here at 43.90. Moves out sharply in our favor, crosses the 270 and the noise barrier, so now it feels like an up day. Now this purple line is really just a projection from the RL10 to the RL270 as the opportunity that's implied by that divergence. And so if we just carry that across the rest of the day at 45.60 as a reasonable price target, which doesn't quite close the gap, but it gets about 2/3 of the gap. And the first, so we get these two locations here where it came actually really close to that. Wouldn't be wrong to have sold anywhere in here. But it crosses the 270 and that noise barrier, which is the 30-period Bollinger Band on the 270. Then we get a peak, it pulls back, finds support, bounces, comes back, gives us almost a triple top, you might say. And I exit here when price in the regression line 10 crosses back over the 270 at 45.30. So that is about $1.10 on 30 cents, so a little over about 3.5 R. Now what's I find kind of interesting is that first excursion past the 270 is represented by this yellow shaded area. On this move to this little hump, that's the same yellow block. That's the same yellow block here to get to the new high from the projected 270. And then after it crosses the 270 and pulls back down again, it's almost one of those yellow blocks. So there's a certain symmetry about price excursions from the 270 on the intraday basis. So these two blue circles are areas where I might have thought about taking that profit sooner. You get the time value of money, and it gives you the move you're hoping to see almost immediately, in the space of an hour, as opposed to suffering through this little dogfight here. All right, so the next one is IWM, which was a channeling signal, and you're supposed to buy that one at the open, and if you did, you got a heck of a good price down here. But again, the same thing happens. Big gap down, jockeys around for a while until the price and the regression line 10 crosses the RL90. Again, we'll just draw that projection here and then across. You can see that it achieved that level of effort. So an entry here at 114.40, 40-cent stop below the low of the day. Never seriously threatened. And then again, same exit point as we did in XIV when the price ribbon crosses back over the 270. That feels like that's all there is. So these are the, after that first move, these are the two excursions on the upside of the 10 from the 270. So that's a yellow block. And this is the same size price block. And then after we exit, the excursion back to the downside is it's exactly another one of those boxes. So there's a certain symmetry that is compelling about this setup and this framework. And there's something I really like now about this, the RL10 and 30. When they cross the 90 after that gap, this sort of says that the morning shenanigans are over and that this is now a trend that is playable. And then I like projecting that price. I think there's a certain elegance to that as well. Sort of calibrating the willingness of the market participants to jockey around whatever we think the fair value of price is. All right, so that's a couple quick case studies in the rlff, the regression line fractal framework for July 10th, 2014. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.